actionable, investable, and honest. I'm Greg Greenberg, and this is Buy This, Sell That. Let's make it profitable. Patrick Gunlock, one stock you like is Ebix. Now, they provide software to insurers. Insurers had a great first quarter. Will this translate to Ebix and their earnings?
Yeah, we really think so. Their customer base certainly has been getting a lot stronger over the last several quarters since the financial meltdown and coming out of that. While not a household name, this company has been one of the strongest growth companies over the last decade. Strong double-digit growth year in and year out. We think there's a lot of running room left. It's a very fragmented industry. They're growing both organically and by acquisition. Great cash flows, great margins, and we think there's a lot of running room ahead.
You also like CaesarStone, which is a recent IPO. Now, they provide countertops. Now, how will they do in a very slow housing market? We know it's coming back, but it's still slow.
The nice thing about CaesarStone is that while people might be tempted to think of it as a housing play, that would just be a great bonus for them if housing came back. In fact, it's a market share game, it's an adoption game. Quartz countertops, which they manufacture, are getting a lot of traction, gaining share in the United States. They've had a lot of success abroad, and they're bringing that success here to the U.S., and it's working quite well so far.
American Capital is another name in your portfolio. This is a controversial name. They lend money to small businesses, also sell a lot of stock. Why do you like it? Because once again, it's a controversial name.
Yeah, this is a stock we really like quite a bit, and precisely for some of the reasons you mentioned. There are a lot of misconceptions about it. This had been a company that liked to sell stock, as you mentioned. What most people don't realize is right now they've been buying back stock for the past 3 quarters. They've been cleaning up their balance sheet dramatically. Book value has been growing, and they've been buying back shares for the last 3 quarters. They trade at about $6 below their net asset value. They're in the 8s versus 14. Buying back stock is very accretive, and we like that one quite a bit.
You also like Oracle Gold. Now, the gold miners, like Oracle, have not been doing as well as the metal, and certainly not as well as the S&P. So why own Oracle?
Yeah, so Orico is a company that is growing production nicely. They have a very low cost structure, and part of the problem in the industry, there's been a lot of cost inflation in building new mines. One thing Orico has done through the recent acquisition of Northgate Minerals, they purchased the Young-Davidson mine, which was almost done being constructed. So they avoided being penalized by the cost inflation, but they're going to get all the benefits of the increased production growth as that comes online imminently.
All right, so those are your buys. What sector or stocks would you sell? What are you skeptical of right here?
We've been skeptical of what's been going on over the last year, particularly in 2011, the flight to quality, the flight to safety or perceived safety, whether it's things in the consumer staples area, high-yielding stocks. These may look attractive on the surface, but these have been hiding places, not necessarily because fundamentals are strong. And we're investing in companies where the fundamentals are good, and we think that'll be rewarded.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to